Klinken nieder. Das ist aus. Das ist interessant.
Alrighty, good morning, good afternoon, good evening, and good night, depending where you are joining us around from the world today. And welcome to another live stream where we are going to go through the latest news, the latest Twitter highlights, and the latest adoption. My name is Wasim, and I'm coming to you from Decrypting Crypto and Breakout Solutions. We've got a pretty big and a lot of information-packed show today. Or episode today, and we're going to be looking at 7 banks that are working together to increase liquidity. We're going to be looking at a $1 million Bitcoin prediction within 90 days, and we're going to look at some great news coming out of El Salvador. So without any further ado, and I've got a couple of videos that I'll be playing for you guys today, so stick with me as we go down to see what's actually happening in the world. First up, we are going to have and where are my banners? Oh, there we go. News highlights. So that Maddie, who's no longer going to be joining me, we have made a bit of a change, guys. So Tuesdays and Fridays is going to be myself. Mondays and Wednesdays is going to be Matt on his own. We just thought it might be better, just in terms to make it flow a little bit better. So give us some comments, let us know what you think, and let's get started. All right, so I'm going to share my screen first up, and then I want to play you guys a bit of a video, which I will actually first I'll speak about this, then I'll play you guys a video so you can make up your own mind about what Janet Yellen had said. So first up, we've got U.S. banking system sound, but not all deposits guaranteed, Yellen says. So on Washington, on March 16th, Reuters has reported that the U.S. banking system remains sound and Americans can feel confident that their deposits are safe, Treasury Secretary Janet Yellen said on Thursday, but she denied that emergency actions after 2 large banks' failures mean that blanket government guarantee now exists for all deposits. So this has caused more fear in the market because people are like, well, hang on, are all deposits guaranteed or are they not? So in this hearing where she was questioned about the bank guarantees and what they mean and which banks are guaranteed or not, she basically said that no, not all banks are guaranteed, and it's going to come down to a decision that she says a bank only gets that treatment. She told U.S. Republican Senator James Lankford, if supermajorities of the board of the Federal Reserve, the Federal Deposit Insurance Corp, and in consultation with the president, in consultation with the president, determined that the failure to protect uninsured depositors would create systematic risk and significant economic and financial consequences. So basically, she's saying that they get to decide who they bail out and they get to decide who they don't bail out. So what they're saying now is if the bank that is failing, if they believe that there's not going to cause a systematic effect or systematic risk on the economy and financial consequences, they will let it fail. Now, look, I'm all for letting banks fail because this will make them act better. However, historically, we've seen that they bail out who they want to bail out, and this is one of the biggest problems. So I'm going to play you guys a quick video. It's a 4-minute video. So stay with me of the actual hearing from Janet Yellen.
Start with some of the banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
We made that determination.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks. We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
Well, you're not fully insured. And
You were at Signature, and it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks, and that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So there's a
to
special
discourage
assessment that's been done
contagion.
on community banks in my state and all banks across the country. Was there any discussion that that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
I think I'm not certain what the rules are around that. That's for the FDIC to determine.
It has been reported publicly that SVB had a large number of Chinese investors that are there, including some that were companies directly connected to the Chinese Communist Party. Will those individuals, companies, entities, and investors that are Chinese investors be made whole based on assessments in my banks in Oklahoma? So what I'm asking is, will my banks in Oklahoma pay a special assessment to be able to make Chinese investors whole from Silicon Valley Bank?
Uninsured investors will be made whole in that bank, and I suppose that could include foreign depositors, but I don't believe there's any legal basis to discriminate among uninsured.
I get it, but I'm just saying that my community banks are going to pay this additional fee. It is always fascinating to me as well, the conversation that taxpayers are being made whole in this, that taxpayers are not going to have any kind of consequence on this. I'm sure my bankers are going to be very excited to know they no longer pay taxes.
All right, so what you saw there was the Janet Yellen, who is the Treasury Secretary for the United States, basically saying that not all banks are going to be covered by this new ruling, which means more and more of the smaller banks are going to lose depositors to the larger banks. And this entails, is just going to mean that more money is going to be concentrated with the larger banks. They're going to get to do what they want because they're too big to fail, and the smaller banks are just going to be wiped out. This is just very similar to lockdown back in 2020, where the smaller businesses weren't allowed to open, but the larger businesses were allowed to open, and this had a huge effect on small businesses. So this is a very, very scary thing that I'm looking at, and it's actually something that I'm worried about. I'd love to hear what you guys think of what you just saw there. So put it in the comments. Happy to take your feedback and bring it up on the screen. So moving on to our next story for the day, where we have 7 major banks to increase US dollar liquidity via swap lines. So these 7 banks are the Bank of Canada, the Bank of England, the Bank of Japan, European Central Bank, the Federal Reserve, and Swiss National Bank. So what they've decided to agree upon is that they are now going to allow each other to print money to give to each other. So it means if one bank is struggling, they can just go to the other bank, they can print more money and give it to them. And this is going to happen for at least another, I think it was for like another year or so. Well, actually to April or May. So basically, this is going to allow these banks to now, if any of these countries have any financial crisis or they have any liquidity issues, they can just grab liquidity from other banks to be able to pay it out. This is just going to cause more and more flushing of money into the system, which is going to cause even more inflation down the track. We've been talking about for a long, long time now that by governments and by these central banks just flushing the system with money and not allowing these smaller banks to do the right thing by their depositors and not lend everything out, which is what they do through fractional reserve banking, which is why we have this problem. And the funny thing is, there is a bank in the US who is actually trying to go for 1.1 to 1, actually 1 to 1.3, 1.1 to 1.13. So $1 for every dollar deposited, they want to have $1.13 in the Federal Reserve, which means depositors' funds are 1-to-1, like we're expecting from crypto exchanges now. There was a bank that was applying for that, but it was rejected. They want banks to be able to leverage. They want banks to use your money and then go out and invest it wherever they want. And if the banks fail, the taxpayer and we pay for it through inflation. Next up, we have, what do we got? Oops, that's not the right one. Okay, what do we got? We got New York Times. So UBS agrees to buy rival Credit Suisse bank. So Credit Suisse is a bank that we've been speaking about for a little while now. We spoke about it recently, where it's been facing a lot of challenges, including, and this is quite a long article, go through all of it. But I did have this highlighted. Oh, where did my highlights go? So one of the challenges that this bank was holding was, okay, over here. So UBS has rebounded. Credit Suisse struggled. It lurched from crisis to crisis, paying billions in fines over involvement in an array of scandals, including traders manipulating the foreign exchange market, foreign bribery, and drug laundering. So they keep talking about crypto and Bitcoin being used for drug launderers or drug dealers and money laundering. Well, this is one of the largest banks that's been around for over 100 years in Switzerland, has been fined over and over again for these type of illegal operations. Now, this bank, obviously, because of what happened with SVB, a lot of people got spooked. They started taking out billions and billions of dollars out of this bank. It couldn't meet its obligation, and therefore it started going under, and it got sold for $3 billion at the end of the day over to its biggest rival bank, which is UBS, which now makes UBS the largest bank in Switzerland and is consuming and dismantling this other bank. This is going to cause people losing their jobs. It's going to cause other investors losing money. This is actually going to have a very, very negative effect on the market. But they wanted to show that the financial sector is actually still intact and people can rely on it. You got to understand something, guys. The only way that the financial sector stays up is because of the confidence that people have in the financial sector. It's not because it's a house of cards, but as long as people have confidence in it, it will stay propped up. And as long as governments keep flushing money into it and bailing them out, it will stay up. So once people lose confidence, which is what's happening now, and we're going to show you a chart that we are actually about to go into some really, really tough times when it comes with the banking sector, and one of the biggest downturns since 1930 is once people start losing confidence in the banking sector, then it's going to start to have some catastrophic effect. Last up in the news highlights. Okay, we have world's largest asset manager BlackRock is exploring tokenization of stocks. So BlackRock, if you don't know BlackRock is, I'd highly recommend you look it up. There's a lot of videos about them on YouTube. They are basically the world's largest company, and they pretty much own everything. Any publicly traded company you can think of, they own a share in it, and sometimes they own a majority share in it. And this is, so they're a very, very rich company. They're the largest company in the world. What they're looking at doing now is tokenization of stocks, because they understand that blockchain technology is the way to go. However, this will be a centralized system where they can get to control stocks. I'm not a fan of stocks. I don't invest in stocks. I think stocks are manipulated and easily manipulated by the companies that own them. So I stay away from that. But they're now looking at ways such as in India, Brazil, and parts of Africa, where they are seeing that these countries are leading the way in innovation, but the West is falling behind. So they're looking at ways in which they can catch up, and the tokenization of stocks is a way of doing it. It will be a permissioned blockchain, which means that it's not a permissionless. So Bitcoin is a permissionless blockchain, which means I don't need anybody's permission to be able to send anybody else any funds. With a permission blockchain, what that means is just another word for a centralized blockchain controlled by them. All right, so let's move over to our next one, which is we're going now to go on to the we're going to go on to the market updates. Let's look at what's happened over the past week in the crypto market. So as you guys would have seen, Bitcoin has been pumping for the past week or so. It's been up over 30%, 40% since the banking collapse. And it's still pumping. We can see here that Bitcoin is still up 13.7% in the past week. Mask up by 69.2%, CFX by 55.1%, IMX by 32.2%. MakerDAO is down by 25%, XDC 41%, and SDX by 46.8%. So the people there's still people moving their funds. I don't know why FTT is up by 23.5%. I have no idea who's trading that. But anyway, after what's happened last year, there's still some people out there that are, they have a very high risk appetite and still investing in that. So over the past 24 hours, we've got Bitcoin, and come on, load. We've got Bitcoin that's still up by 0.75. It's still trying to push that $28,000 resistance. Ethereum is down by 1.49% at 1717. BNB is over 300 at $326, and it's still down 91%. Now, looking at the Fear and Greed Index, we see that we are coming to pretty close to high greed. We're up in the 68 out of 100. So this year's been a year where more and more people started coming into crypto. We're starting to get to the greed factor, and as you guys know, when it's max greed, that's the time to be selling and taking your profit. When it's max fear, that's the time to be going in. So right now we're getting closer to that point where you should be starting to look at taking profit if you are in profit in some of your investments, and looking at holding that dry powder till things start cooling down. Nothing that goes up stays up. Everything that goes up is going to come back down. So we are still expecting volatility. Although what's happening with the banks right now, we may expect that there could be a strong run at least in the short term future. All right, so I said to you guys about a $1 million Bitcoin prediction in the next 90 days. So Balaji, he went on Twitter and pretty much broke Twitter on the weekend, and he basically said that he's willing to take a bet. You buy one Bitcoin, I'll send $1 million, and that's a 40-1 odds. And then anybody that, if Bitcoin is on $1 million in 90 days, you get to win $1 million. I think it's a pretty good bet because I am not confident, and I really hope that Bitcoin doesn't get to $1 million in 90 days. Because if it does happen, then we're all stuffed. Because if that happens, that means the value of the dollar has dropped so much that Bitcoin is worth $1 million, and we are in hyperinflation and hyper-Bitcoinization. Now, if this does happen, I don't know where he's getting this data from. He's suggesting that he's willing to go into a bet with anyone. So if anyone's out there willing to take him on that bet, buy one Bitcoin with a potential of winning $1 million in 90 days. He's willing to do that. I think it's a good bet for anybody who's willing to take it. I'm not confident we are going to see this, but it's interesting to see the type of conviction that some people have. And it's interesting to see how much people are willing to believe in Bitcoin. I truly believe in Bitcoin. I think it will become $1 million one day. Maybe not in the short term. In 7 to 10 years, it has a very good potential of becoming $1 million asset. And I actually recorded a video today, which is going to be published on Thursday, so keep an eye on that, where I'm comparing Bitcoin to gold to fiat to other assets, and why Bitcoin has a very, very high ceiling price. And some people have even said up to $10 million per Bitcoin at today's prices and today's inflation rate. All right, so next up, we've got, again, another tweet about Janet Yellen, I believe. So let's have a look at that. All right. Okay, so this is the tweet by, hang on, where'd it go? So this is a tweet by Seidler, who actually just showed that 4-minute video that I showed you guys. I don't know where, there it is. So here's the tweet, and this is basically showing that what Janet Yellen was saying. Let's have a look at some of the comments in here and look at what people are saying. Where is this? And this is fantastic news for the smaller banks. It's the best news possible. What about uninsured deposit we repaid through special assessment levels? Where else is this? I was looking at some of the comments earlier. So basically, people are very, very skeptical of Janet Yellen and this new rule, where only some banks that are too big to fail, and not all banks are insured, which is obviously causing more and more fear in the market when it comes to banking. All right, last up, we have Wall Street Silver. So for all various reasons that have led us down to this lethal juncture, central banks are now doing the exact opposite of what they did in 2008. They are tightening into a burgeoning credit crisis, which means we've entered the most lethal financial crisis since the 1930s. Basically, what this chart is saying is showing the US bank index and how much it's lost. So this is the height of the US bank index, and then it's starting to go down, 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 down. This is the FTX collapse, and then it started going back up. Then you've got the Silvergate. Then you've got SVB, First Republic, Signature, First Republic, Credit Suisse, and this is now starting to go down. Now, a lot of analysts are saying that we may have a rate hike of about 25 basis points this week or next week, which means that the Fed is still not finished with trying to bring inflation down. The problem that the Fed is facing right now is very simple. Do they go back to quantitative easing and start flushing the market with money and reducing interest rates, which then will increase inflation, or do they keep tightening and then something else breaks? Now, we already know that with the backstops, they've already gone into quantitative easing, but it was a backdoor quantitative easing, not a front door. So it's not out in the open that they're reducing interest rates and letting more money back into the market. So now they have this really hard, they're in this between a rock and a hard place, as they say. What do they do to try and reduce inflation? They don't have many tools left because they've used everything that they have and they've already broken the financial system. So it'll be interesting to see what they do moving forward. All right, moving over. That was the Twitter highlights. Sorry about that. Moving over to adoption highlights. And great news from one of my favorite countries in the world, El Salvador. El Salvador launches a training program for Bitcoin and Lightning Network devs. So venture capital firm Folger and stablecoin issuers Tether are backing the training program. It's a CUBO Plus program. It's modeled after President Nayib Bukele's CUBO initiative. Now, I don't know what the CUBO is. I'm sure I probably read about it. I don't remember what it stands for. So it's another program that's developed by the El Salvador government to allow and educate people around Bitcoin development and Bitcoin blockchain. So it's all in his effort to generate or to attract more developers into the country, which is going to make them stronger, going to get them to become leaders in the tech and leaders in development and innovation. And also we know that, recently El Salvador has opened up a Bitcoin embassy in the Ghana city of Switzerland, which is now which has Bitcoin and Tether as de facto legal tender. Next up, we've got Microsoft. So Microsoft Edge testing built-in Ethereum crypto wallet, screenshots below. So I'll got the screenshots over here for you guys. Basically, Microsoft has been testing on the Edge browser, which hasn't really had much success versus Chrome, but they're trying to bring more and more people to it. So they are looking at building in a Ethereum wallet in there. Now, I haven't been able to find anything about whether it's going to be able to support other chains like MetaMask. You can add Binance Smart Chain. You can add Arbitrum, Polygon, whole range of different chains onto it. So I'm not sure whether this wallet is going to be doing that. However, it's the first step towards them allowing big Ethereum blockchain into their browser. The browser that does this already, Brave, already has this in there. I don't use the Brave wallet, to be honest. I use the MetaMask, but Brave already has this. So they're looking at competing with these other browsers out there. All right, and last but not least, we have over 80 firms, crypto firms, eyeing presence in Hong Kong financial secretary. So as you guys know, we spoke about this earlier. I think it's around June or something. Hong Kong is going to look at allowing digital asset service providers to be able to open up in Hong Kong. So previously, China has banned Bitcoin and banned crypto, but now Hong Kong is part of China. And I think I said last time it wasn't, and I was wrong. I did look it up. But Hong Kong is part of China, and now that Hong Kong is going to open up to digital asset service providers, about 80 companies and 23 of them have already started working towards opening up there. Now, imagine the amount of the flood of money that's going to come in from China. China is the world's second largest economy right now, and they're making like, I think I read somewhere, like, I can't remember right now, but there's more billionaires made in China than anywhere else in the world right now. So imagine how much more money is going to be flooded into these exchanges once this opens up. All right, so look, that's it from me today, guys. I am going to leave you with one last video before I say goodbye. And this video is a very thought-provocative video. So before I say goodbye, guys, I'm going to play this. And as I always say, stack sats and sack banks.
It is very clear that the head of the snake is the financial system. We can argue till the end of time about who runs the world. Is it the Jesuits? Is it the reptilians? Is it the Illuminati? Is it the Freemasons? We can go on and on and on and on about this. But I don't think it is reasonable to even begin arguing about the mechanism that is used to exert this control. The mechanism is finance. The whole point of finance is to indebt, otherwise to enslave. What is a mortgage? I mean, what does that stand for? It's a death grip. So when you get a mortgage, you have a death grip held over you because you are in debt. You don't even own the house. The bank owns the house that loans you the money to buy the house, unless you're fortunate enough to have all the money to buy it outright. And even then, you can be taxed by the government, and if you fail to keep up with those taxes, the government can then take it from you. The whole system is based on a financial fraud, which effectively takes the power that we have and it gives it to a tiny group of individuals who are running the world through the control of finance. With the infinite supply of money that we have allowed them to take, they have literally an infinite supply of money, and with that money, and from their psychopathic point of view, they have bought everything and everyone who can be bought.